Good afternoon. We're coming to you on the 20th of December from the Meta trading room. We are, 4 days from Christmas now, and the market is trading thin and lack of interest, as you would expect, with majority of big players away. If they do have something to do, it's going to be minimal. We saw the market pretty well carry on where we left from last night's and this morning's meeting that we spoke about. Hit quite perfectly on most of them on targets, which we'll go in on a bit. But just to go through what actually happened, and significantly we actually closed under the 50-day moving average on the S&P. Yes, it did bounce, but a lot of people are going to look at that. So we saw big losses. A lot of it's just flow through that we all spoke about this morning, so we don't need to go on about that. But we did bounce off those intraday lows. Over in Europe, they're tightening up their economic restrictions. And we had Senator Manchin over here, as we said, reject what's it called? Build Back Better.
BBB.
Yeah, and I think most people kind of see that for what it is, and we've seen constant. It's like nothing changes. It's like, I think if you say it enough, it'll come true, because the last headline I saw was Biden saying he's going to talk with Manchin in the new year, and they're all buddy, and so, as far as the Dow, S&P, and Nasdaq were, it's on pace now for their fifth negative session in just 6 trading days. The Dow was just short of 700 points at its lows, down. And the Nasdaq is as much as 2% off at its lows. So they were big moves. And if we look at the actual close, so it's almost 700. We closed to be down just 433. The advanced decliners, again, were kind of a shocker. The NYSE, just 636 advances. Declines 2634. I mean, this is all as you expect when everyone's one way. We talked about the massive shorts out there. It was a good time for them to cover if they wanted to take profit, if that's what it was. And we also talked about how there's this misconception it's bullish if there's a lot of puts out there. It depends on the circumstance and basically who has the puts and why, right? So just a lot of that happened, and we saw also on Friday, and we'll go through that later with Nick, how much vol collapse was like a vol apocalypse. They bought puts up high into the weekend, and you saw them come off quickly and then rise again through the day, as we didn't get a bounce really to the end. So you can see there's genuine risk covering, or I don't think people are buying puts as speculation so much at this time of the year. Perhaps that's probably already done, your Uber bear sort of thing. Crude oil bounced almost $2 off their low, so they were down $4, and they settled down $2.27 at 68.66. So still a good price for oil and gas companies to make money, no doubt, but off the highs. As far as that BBB, the reason I mentioned it again was we saw stocks that people had punted to do well from it get hit today. And one of them was Solar Edge, and which is made up of all the solar names in general. That was down almost 10% today, $27. And that symbol is SEDG. Within that, Catalent was down 6%. Ralph Lauren was also down. For some reason, it's getting lumped in that. I am not sure exactly. I would have thought that is more just a retail stock, but what would I know? So we saw bonds go away from their safe haven bet in the morning to actually rise in yield, meaning bonds were being sold off. So let's get into our charts. That pretty well covers what happened today. The last thing is Micron and Nike both came out of earnings, and both of them are up. After those earnings, that could also be a bit of a relief rally. The numbers, though, were better than expected. Okay, so let's have a look what we actually did. Start off with the hourly. And it was clinically pretty perfect this. Since that we've gone through that, the 8 plus 2H cell, it's come down really nicely. Look, 1, 2, 3, 4, 5 in 5 waves. Perfectly. So the question you got to have is this A, B, C, this whole thing, or is this the first wave down to something big and this is a B? So we didn't quite get to minus 1/8 down here, which you would have liked, but it did get to almost 0.08. We saw a little bit of work in a chical, but look what it did. We're actually unbalanced here at the end. We went overbalanced, which may surprise some people. So that flurry at the end actually got out a wink. So that's usually not a good sign. That means short covering, relief, right? If we go to the daily, and what do we always talk about there? The tanking, right? So that tanking was tanking. What did I just do there? Let's have a look. Somehow we messed that chart up. So let me go back over here. I'm not sure what I did there, guys, but I see what happened. So you can see our trading. That's our meta. If you haven't seen our metaverse, there it is right there. That's our trading room. You like that? And let's just go back to that. So here's our Apple. So Apple gapped down and tried all day to get back into that gap. In fact, where we're closing a little bit, we're trading a little bit higher than the close. We couldn't get into it. Look on the 60-minute. We're being held back by a flat Cajun underneath the gap. And if we go to the 240, the tanking right at the bottom. So this is a lot of resistance it's got above it. So you're pretty clear what's going on there. The S&P, that's another look at it, a cleaner look using your Murray and your Ichimoku. And here we have it on the 240. So what we're going to look overnight, does this tanking come down or does this go up? So keep your grid time. Remember it is Christmas. So I'm not sure what I did to this chart, but we will make it smaller. And let's have a look at the other markets. And then I'm going to bring on Madavi, who trades the NASDAQ non-stop all day and does a fine job doing that. Let's bring this chart up. So it's very similar to the the S&P. But I want you to notice one thing in particular. Look at this positive divergence here. See this? So we went a tad lower here. That gave you that bullish rally. And as I recall, Madavi, that's where you got nicely long, right? Whereas the S&P wasn't doing much for me at all. See that there?
Yep.
So from here we've had like nice short covering. So if you just want to talk us through that trade you did on the S&P versus the NASDAQ and the Russell. I'll make it a bit bigger as we talk. Yeah, go ahead, mate.
Oh, you're talking to me?
Yep.
Okay. Oh, well, I came in over the weekend short and stuff. And so whenever the market started to like flatten out a little bit, it was not really going down. I went long some, and I was pair trading a little bit too. I was trying to go long the NQs with the S&P short at one time. Then I switched it and went long. But most of the money I made in the morning, in the afternoon was okay. Just a couple trades, but it wasn't that great. But all the morning was good. But for a weekend of Christmas, it's a pretty good trading day. So I'll take it any day. And then So I mean, this is usually don't see it this volatile. Hopefully it stays going the whole week, but I doubt it. I think we're going to get slowed up as the week goes. But like I said, I got a feeling they want to dump this market. because just the way I was acting so close to this supposed, what do you call it, Santa Claus rally or Christmas rally.
It's more like
So,
Santa Claus brought coal, right?
yeah. So, and then in the morning, the Modernos and the NVAX was up. I did a long trade up, did okay there. But the big move was on the short side, which I missed. As soon as the market opened up, those things tanked. Oh man.
Right, I noticed that. So those vaccine stocks are basically buy the rumor, sell the fact. I mean, if everyone's, I mean, I know it's a shocking joke, but Moderna needs a boost, doesn't it? You look at that chart;
Oh
it
yeah.
just went straight down.
Mate. Oh, mate.
Everybody needs
They
a boost.
completely missed it. But I got up now the
Alex needs a
Russell
boost.
chart. Well, actually, yeah, the good point. Most of the money was all from overnight to straight down. It was a pretty straight down short from Friday. The one thing I want to point out is I expected vol to collapse. So as pretty well as that market open, I sold any short dated puts I had on Apple. You know, pretty much straight, which worked out a good strategy. I did roll some and then trade them a bit, but at the end of the day, once again that stopped going down with vol, you need to get out of it pretty quickly. And I made that comment, I think, even on Twitter. You need to understand theta and you need to understand delta. Forget the fancy name stuff. It's usually just people not because they're relative. So basically, the other Greeks. You got your directional Greeks, which you need to understand, particularly in violent markets. Because what will happen is when that it does what we call vol apocalypse. It's kind of a natty gas term, but we saw it in you see it in equity and stocks. It's so fast that if you're looking at the minor Greeks, you're gonna miss it. Are going to miss it. I shouldn't say gonna, right? Gonna do this, gonna do that. But a very important thing to understand, and that impacts the spider, but not as dramatically unless you're trading more at the money. Therefore, the spreads are more, etc. But yeah, sorry, I wanted to just touch on that. Was that
Hey,
Alex
Andrew,
I
I've
heard
joined
in
you
the
guys too.
background there?
It's me. I'm here.
So we got the Mayhem Man in here joining us today. So before we go on, so welcome, Alex. So I just
Hey,
wanted
thanks.
to, yeah, let's go through this Russell. I don't trade this. I kind of mock it at times because, but all in good fun. But of note, what we held today was exactly the low from here, which I think I made a point on July. But if we were to go right across here, this has been a major level since January of this year. So really all of 21. And so we got down there again today. The danger this thing has is that we really all year, and this is a daily chart, we haven't even gone over two whole Murray math quadrants on a daily chart. Compare that to the other. If it gets through all this becomes a massive rolling top with a ton of people stuck on a lot of names. And here's what happens on the things like the Russell. If these, just say you own a stock up here, paid $100 for it, it's now 40, and say you're here, argument's sake. If we go down here, they will rebalance this thing, and your $100 one that's probably now 20 gets chunked out of the index. That happens. So
Yeah.
it happens on different index. Like on the Dow, that happens twice every 10 years. How often do we see a Dow change on this thing? So bear that in mind, because that means the only reason your stock was up, and particularly if they don't make money or pay a dividend. Well, I'm assuming they pay a dividend, they make money, but hey, we did see the oil companies not adhere to that. That may be the only reason your stock is up. We know that if you get it put in the index, there's certain index matching ETFs or futures, whatever it may be, that you match or your basket will match. So that's worth pointing out there on the little Rusty. We went through Apple, went through NASDAQ. So let's have a quick look at our market profile. Interesting today, the Tenkan was almost market profile. That should be how it is more often than not, actually, in a balanced market, right? If you think about it. We closed
Yeah.
right at the top here and stayed in that profile. I remember that mark got ahead of itself. And quickly Nvidia tried to rally. It looks like it filled that gap. Oil was this morning, if you recall, it broke this pennant, came roaring back, but didn't quite get back in that expansion. But what we have done, if it rallies, A, B, C. So it really, unless it gets under today's low, this has the energy now to get up to this cloud. I wish that if that cloud was flat, I'd be pretty bullish on it. Right now, I'm still ambivalent. It will follow risk, and it will follow any geopolitical action that's going on. And that's today's 5-minute. That was a classic trade today if you look at what it did. False break here. This is where it became a buy. It got over that. And we just rallied all day. We motored up and we got through all these points. But look how far we're under the pivot and S1. Remember, that's because we were sideways for so long. And finally, natty gas. And we actually had a rally today that held most of the day. That doesn't happen very often, this little thing lately. So that's all weather. Remember, that's all weather models. The models need to stay firm for this to continue in its uptrend. Otherwise, we're back down here. Hey, there is a false break here, though. So if you remember what oil did, almost the same thing. So we'll talk macro in a minute, what we think is going to happen next few days. I know Nick just wanted to share, we talked about that vol apocalypse there, so he's got to, let me bring that chart up for you, if I can find it. So this is a good example of what we're talking about. What happened today, right? So let me bring that up.
Mate, are you streaming?
Yep, we're streaming. You're live.
No, I don't see your charts is what I mean.
Oh, let me bring that back up for you then, 1 sec.
Thank you, sir.
So we're talking about the apocalypse right here, and this chart just let me bring that up. So you can see this chart here, and Nick will walk us through it here. Let me just re-push this chart to everyone in the meta room here.
That's how we'll chart in the future in the metaverse.
Exactly. Except you got Zuckerberg playing with his fingers in the back corner, or whatever he does, twiddling his thumbs. So do we all see that now? If you want to walk us through that, Nick.
Yeah, just so very briefly, I think not particularly surprising. I mean, we just vols overall, we opened up much higher, and then it sort of cruised down during the day, as you noted earlier as well. But perhaps more interesting is exactly the one above that. So skew, and this is compared, of course, to Friday. We saw this collapse essentially in the morning. As skew came down quite substantially, and then just throughout the day it sort of pulled back up. But yeah, no, that move in the morning was quite interesting, quite large.
Yeah, that was that nice reversal. And here's a good point about puts, right? So people here's the thing: if you sell puts and get high premium for it, this is why you do it. You want to make this. But there's a huge difference from people saying, I'm going to buy stock because there's people own a lot of puts. In fact, if I had someone managing money that said that, that's their last day. Because think what that means. You're saying, remember what I'm saying, you're not the guy that actually sold the put, but you're going to buy the stock because someone else is buying puts. Huge difference. So I might sell the put here to get the premium, and full knowing that I'm going to take that premium to whatever I bought it from. So this is a spider, but in easy terms, what's a stock we all trade a lot? I mean, in Apple, I guess. So just say I sold a 167 put. Well, let's do the one we traded, 165.50 put. I sell it, I get $2 for it. So basically, essentially, I break even at 164.5, right? Now, I know as soon as that market opens, this is what happens. That $2.10 I just looked at it is now 90 cents. So I have a choice then of buying it back, right? Or whatever. Whatever my choice is as a trader, dealer, whatever I am. But a dealer doesn't, a market maker essentially trades, makes you a price in it. He's not a price taker. Big difference too. So just be careful what you're reading out there, particularly on social media and what's that big one? Reddit, right? And
Yeah.
so the ignorance is astounding. It really is, and it's dangerous. So let's put the other situation. This same bloke wants to buy Apple at 172 on the basis there's a ton of puts. What does he do when it opens at what was the low? It opened around 167, right? So he comes down. I give you the tip. 7 out of 8, he's going to average, because that's what he's been doing. Actually, let's go 5 out of 8. That's probably what he's going to do. 1 out of 8 is going to be crying conspiracy, margin call, dumps it. The other 1 out of 8, I'm starting to sound like Gan, that's not good. The other 1 out of 8 is going to then be buying put at what time, Nick?
What's that?
What time is he buying put at? The worst possible time, right?
Oh,
It'll
of course, yeah.
here at the open. And the price maker is going to be going, wow, that's nice. Boom. Right, so that's the reason often why so the other point I wanted to bring that up is I'm selling these puts that I own from here, even though Apple's down $3 this morning, right at the open, because even if it falls, it's got to fall so rapidly to maintain this that happened on Friday. And we've just burnt 2 days of vol off, right? So unless you're long term, this is what happens.
Yeah, exactly. I think that's very important to mention. If you're trading short dated options, right, as you're talking about here, I mean these effects are really magnified. So for something, for instance, positions I have that are out, like 4 or 5 months, something like that, it's still obviously something to pay attention to, and it still has an impact, a significant impact, but nowhere near as much as taking whatever, like half the value of the option off.
And that's why the second Greek I always believe. So I like to keep it simple and react, because you got to act fast and quick. You know how fast this market. You got to trade what's in front of you. So there's delta obviously, so you know your risk, and that'll get out of whack. So you want to be in control of that. This is what gets sellers in trouble. We saw that whole run up on Apple, then we saw that whole run down. We saw the whole same thing in the S&P, and I wouldn't mind betting, given that IWM has quite a lot of options, there was probably a lot of put and call selling on that over the last little while, because it's in a tight range still. So I wouldn't mind betting that's going on there. But anyway, the theta is very important to understand, because that's timed expiration. And think of it as an insurance. So you almost have to act instantly. And remember though, you've got prices that can get wide. So what I do is actually put out my orders. I work it out where it should be, and if I get hit, all well and good. But I don't give it too much time if I don't. So that's a great example of that. And this is a spider. So this is a deep, deep market, right? This is the SPX, sorry, not the spider. The spider is very similar. I think it's almost identical. Is it worth looking at?
Yeah, it looks very similar on the chart.
So we probably won't. We got it here, but let's just stick with this. So that's a good thing to understand of options. And there's a time to sell puts and there's time to sell calls for equities or futures. When you are in a bear market, which we've been in, I know there's some of the individual small caps for quite a while, as we've said. If you've been selling puts and keep getting them, then I forget the name of, there's actually a strategy called this, but then you sell the call. You got to be mindful that your asset, which you now own, could keep falling, and it may take a long time to catch up, right? We see that a lot of these real small stocks. Like if I was to look at the high-low ticker now, there's a ton of that. I mean, here's a good example, Billy, which is a Chinese stock. I think everyone in this room shorted around $90. We'll hold this, but it became so expensive, so we didn't. But think of the flip side. The reason we didn't hold it was because vol was so high, right? So we get out, but there's a seller there, and what you saw is a pattern of that seller all the way down. That's now at $43.90. So they're the people who get trapped. Now, all those guys trapped, and a lot of these are in funds, don't think it's just little guys that get it wrong. They're now stuck with all that inventory above here, and that's overhanging a lot of those stocks, right? And so these are, I mean, we all pretty well have the same view on Chinese stocks, but that's what that is. So I think that's pretty well all we want to talk to about stocks. As far as the outlook goes, nothing changes from what we've been saying for a number of weeks now, really. And it's nice when it's all playing out perfectly. Hopefully you guys are following along. You know where you're wrong, you know where you're right now. But it's been one of those clockwork Elliott wave, GAN kind of moves, just total crowd mania. And we're at a very thin time of the year. So anything that's inept, like inept politics, inept banking, inept trading, everything gets magnified. So in a screaming bull market, it gets ignored. In a bear market, just a little thing. And so like the virus thing, that's obviously an easy, sensitive thing. We're coming to Christmas. It's a good time of year to play that up because everyone's, going away to, meet family or whatever for Christmas, or there's a lot of big sporting events and things like that. So that increases the fear, I guess. But yeah, that's all from me, really. So let's see, Alex, we haven't heard much from you, bud. If you want to chime in on anything we're talking about there, views on today.
Yeah, sure, absolutely. Appreciate the opportunity. So I thought it was interesting that Manchin finally confirmed what I think we all knew, that he wasn't going to sign the Build Back Better bill. He wasn't going to vote for it, I should say. And that had a little bit of a negative sentiment impact on some of the areas that Wall Street was pretty confident on. When they believed that the bill was going to pass. So, materials, industrials, some of these other areas seemed like they took a hit, not only because of what's happening in markets, but also they were the bigger laggers on the day. And I think part of that has to do with the sentiment erosion from, this bill not being passed anytime soon, if ever. But on the other side of it, there's actually some positives here. And first and foremost, at Goldman Sachs mentioned this in their analysis when they downgraded Q1 GDP from 3% to 2%. They said, the silver lining is that corporate taxes are probably not going to go up. And I would agree, that is a silver lining. It certainly helps with profit outlook for 2022. The other thing that I think is interesting is, they're reducing the supply of debt because this bill is not passing during a time where the Fed-induced demand for the same debt is diminishing. So that's actually kind of healthy, I think, for reaching some kind of equilibrium. And also, from an inflation
whole thing too, though, because he was worried
his
about
concern,
the debt, right? And he didn't
absolutely
half of the money wasting, but.
He was worried about the unsustainability of the debt. He's also worried about inflation. And that's the last point I wanted to make, is that this bill not passing at this part of the credit cycle is good because it would have driven more inflation from a wage perspective and from demand and from exacerbating some of the strain on certain supply chains. So I think there's some silver linings to this thing not passing, and net, it's probably overall going to be a good thing. From a political perspective, it also undermines the Biden agenda and probably reduces the chances of Democrats winning midterms, which, if you look at Wall Street, they like gridlock in Washington, D.C., so that's another potential bullish takeaway. So, from that, I look at it as longer term. It's not necessarily a bad thing. I don't necessarily think it's a great thing, but I think that, if some of the sentiment erosion was because of that, it was a little over the top. Most of us observers had a pretty good idea that that was not going to pass.
Right. I mean, I think we've talked for a long time it was dead in the water for a long time. And so what I took was, I mean, we said that earlier before you came on, that basically the whole Biden thing, if I say it enough, it must be true. If I say it enough, it must be true, etc., etc. I mean, that's a Dr. Seuss book somewhere in there. And I think they really thought they could shame Manchin into doing something, right? And he was pretty
Yeah.
steadfast at what he's doing. And I mean, there's headlines, just again, we touched on this earlier, that, oh no, everything's good, we'll meet in the new year. I mean, what they're doing is, what they think is holding face, they're actually doing the opposite. And and as far as what get hurt, we talked about that earlier, where the solar industry got whacked. Because the only reason it was up to the overbuying was because of the the BBB. I keep thinking a Better Business Bureau. Is that the idea of it all? Is it to change the name? Who knows what it is, right?
I tell you what, I call it the Build Back Never bill at this point.
I mean, I don't know. Any of us got a kid, I just think of Bob the Builder, and it's about as relevant. But the whole silly thing is, that's the agenda of that for the globalists out there has been pretty well America and England. Like, you'd see the sign behind them, Build Back Better, Build Back Better, when either of them talk. So the poster child for the globalists of the world, just get your head around this, is Joe Biden and what's his name over there? Mr. Johnson. So just think about that. Get it?
Boris Johnson.
So just think about that. So, and that's all just falling to pieces, obviously. So in reality, what it tells me is the idea of, and it's a positive thing as far as humanity and politics and all that goes, because we're seeing where just the constant name dropping of trying to get people to believe it is actually changing. People are starting to think for themselves, because that was obviously the agenda. Put up Build Back Better, forget all the other, and we're seeing that with the whole vaccination thing as well, and so people are seeing through that, I believe. So, which is a positive, which comes back to the stock market, which is what Alex is saying. I think the good will rise, but there could be a lot more destruction in the rubbish, Usually it's a term this time of the year where you get rid of your rubbish, you take out your trash. And we're still seeing that go on, And someone's trash is, someone finds a gem in that trash, obviously, but we're still seeing stuff that just get hit, and you can see it's just big volume of people getting out. What's your thoughts on that, Madavi? You there, boss?
Yeah. So sorry about that. Yeah, I agree. You nailed it. Exactly.
Wow, I haven't heard that before. What about you, Nick? Anything to add, bud?
No, that was perfect.
Now I know I'm living in the metaverse.
Yeah, you've entered the matrix now, mate. You got to be careful.
Right. So yeah, there's a lot of in the bigger picture, a lot of things that could go so many ways, because we're thinking this, but are the politicians seeing that? I find it hard that they want to give up power that easily, So we'll see. Or if and we've also got a new leader in Germany. We're going to have a really bitterly cold winter over there in Europe, the northern bit of the US. We have a problem with high gas prices, etc., exacerbated by the ECG movement with no thought. And we still got Nord Stream 2, hasn't come on yet. So there's a lot of stuff going on. Don't believe all the distraction you're getting from the whole US with the Ukraine and the Russians on the border. Ukraine's been in a civil war for quite a while between the two ethnic divisions there, the Russian and the Ukrainian. They've been there for a while. It's not a new thing. It's their border, etc., etc. But it's a convenient way to create that situation. They're not very happy about it in Europe because they want that pipeline, they want that gas right now. So all those things can sway different ways. As far as in the Pacific and Asia there, similar situation, except we're seeing China really fall away from their bullying and losing a lot of power against the commodities deals with Australia, Japan, etc. So that's changed a lot over there, what's going on. The whole Hong Kong thing you all read about in the paper, I don't think people in that part of the world put too much on it. It's kind of done and dusted. It's not going to change, right? What other parts? Oh, that's what we wanted to touch on. So a story
I think we should
on Turkey was continue while I find that, bud.
Yeah, I think we should stop on China, just talk about it for a second here, because one of the things I thought was pretty interesting, I don't know if you guys have covered it because I'm joining a little late, but PBOC is starting to tilt back in towards a loosening position, just as the situation with their real estate market is becoming a bit of a focal point. And it's interesting to note that because the Chinese real estate market is the largest asset class of any market in the world, and so the knock-on impacts, if there was a calamity there, would be pretty extraordinary. So it's interesting to see this because it's a divergence from other global central banks, except for maybe our friends over there in Turkey, where they're easing. Maybe they don't want to, but they're being forced to. But over there in China, another thing that's interesting is that just sort of the divergence of the economic and credit cycles, because here is a country that kind of started with COVID, right? The knock-on impacts of COVID hit them in late 2019. And so they were, anywhere between 3 to 6 months ahead. And so they also started loosening more aggressively earlier on. And that resulted in them tightening more aggressively earlier on. Around February, March of this year, they really started to pull back. And it was interesting because that event coincided with the top in a lot of speculative assets, right? The velocity of central bank liquidity really meaningfully dropped off between late February and May. And that was around the same time a lot of these small and mid caps, the high beta, rate sensitive stuff really meaningfully tumbled lower, the SPACs and a lot of the Chinese stocks as well. So it is very interesting to watch as they're moving toward dovishness and kind of providing some liquidity, especially their own real estate market. And it'll be also interesting to see if this follows the previous credit impulse cycles that we've seen from China. If it does, then it kind of suggests that they're tilting towards pushing a lot more liquidity into their market in 2022, just as their economy and a lot of the other parts of the global economy are set to potentially meaningfully slow. So I find the situation in China very interesting because they've been in a bear market for really a lot longer than a lot of the rest of the developed world. And so this may be a turning point. Does it mean I want to invest there? No, not really. But I am watching it because the flows that happen over there impact our markets too.
Yeah, definitely China is the market as far as natural gas, iron ore, coal. That's obviously why there's such a big relationship between them and Australia. But much of the latest move you're talking about, the PBOC on the weekend, is because it's endemic, their real estate market over there. And actually, I noticed one of the cities today, or maybe it was yesterday, overtook two of the big property projects from Evergreen. They've said, you know what, we're just taking it, which is kind of what China wants, except they didn't quite want that. They wanted the smaller developers to take it over. And I personally, I think what's going on in China is when they pumped the world or saved the financial part of the world in 2008 with remember all that priming and just building the hidden cities or the empty cities, whatever they're called, and just bought every commodity known to man. That's just, I think it was so dramatic and it's unwound. So a lot of that's unwound. And obviously property's a part of that. So you're seeing that. Then they got into the trade war situation and that kind of schooled them on coal, for example, went from 30 to 300. Iron ore went from 20 to over 200. So all these things they had to buy, all of a sudden they're paying 5 to 10 times more. Dramatic, right? And so they've been in this constant state of flux since. So it'll be interesting when all that settles, whether that also, does provide incentive or growth to the market. But it's kind of a new economy, right? Really, if you think about it like that. Growing pains.
Yeah.
And all that sort of thing. So in the bigger picture, it should work out okay. They're not a country that wants war. I think many countries really do want war, except for one, but we won't bring that up. There's one country. Here's the trick quiz. Which country tends to make a lot from war? So, but if we think rational, but we don't really know what's going on. So, but it's good to have a good idea where these can go. You know, all these different bifurcations that are possible through the world. And who knows? So we look at Turkey. So that's been a dramatic collapse, right? So
Oh yeah.
Erdogan's theory is that the rest of the world's wrong and you don't raise rates to cull inflation. You lower rates to stop inflation, so people can still spend money, and or at least the rest of the world's wrong. Well, what happened since then, their currency totally collapsed. As we can see here, I think it's halved basically in the year. So that all came
I
to a
think
crescendo on Friday and Monday.
he learned a tough lesson about what it's like to have expansionary central bank policy and not have the global reserve currency.
Right. Well, and the big thing, and there was an article the other day that this is a great example of why a central bank and a government should be independent, which most countries are. Well, what old Erdogan would do, he would just fire them, and then anyone in his finance department, he'd fire them, etc. Well, so he didn't mind it too much when the currency was weakening, but the stock market was flying up over there because, you know, it was cheaper basically for an outsider. So, but if you're a domestic, it's kind of like here when the stock market was going up, everyone's happy, right? You know,
Yeah.
when we had the Nasdaq and stuff. So what happened on Friday? It had two limit downs of 7%. So all that good just went out the window. So then he faced on Friday. They got an election coming up. They did have a coup attempt a couple of years ago that failed. So the guy's pretty emboldened. But then he realised, damn, they can't eat. The stock market's collapsed. And they're a massive importing country. And their main industries like textiles and stuff are all imports, let alone food. So he took the drastic action today, and that's why on this chart you can see it kept selling off in the AM. So it went to almost 18.5. By the end of the day, it closed at 14.8, down to 13.5. And this is why I don't play in these sort of markets, because they're very thin. You got to do it all EFP type things or CDSs. So what he did was he came out and said, we're going to guarantee every Turk against the volatility of the currency. Because what was happening, anyone with any money in Turkey was fleeing the country, buying their money, buying euros, dollars, whatever, anything but lira. So that's what that action is. So you've got just crazy stuff. Intervening with the bank, taking over the bank, getting it all wrong, and now making a promise that can he keep that in a country that's running out of reserves because they're trying to defend the lira.
And this is a country that has banned cryptocurrencies too, not for any other reason than because they see them as a competitor to their own currencies. So that's a pretty interesting thing to watch. People that live in Turkey are availed few alternatives, and I wouldn't necessarily endorse crypto as a viable alternative to currency. But just to have your country basically say, no, you can't do that. Nope, you can't do that either. No, you also can't do that. It's like, wow, if you live in Turkey, you're pretty much trapped in a lot of ways.
Right. Well, actually, I knew I'd seen that chart before. That chart could be any one of those cryptocurrencies, couldn't it? So I guess he's in the right space. But what Erdogan's got to understand, he needs foreign money.
Yeah.
And he needs stability. But I don't think he's thinking. I think, this kind of reminds me, I was talking about it with Madavid today, when, I don't know if you remember, when all that trade deal nonsense was going on with Donald Trump. There was one time the stock market was down maybe 100 handles, something like that. And he came out and said, I was on the phone, or I had contact or something like that from the Chinese, I can't remember, it was actually Shay, but someone anyway. And remember, the futures just flew up, and they flew up for days. And then later it comes out, well, you know. So he didn't actually speak to the guy, but Same thing here. It had the effect by saying it or promising something of making all the people the other way. In these cases, both shorts have to cover, and it feeds on itself, right? So maybe he's taking something out of the Donny playbook there, Madavi. What do you think?
Yeah. But you also got to remember, it's against Islam to charge interest too. That's another reason Erdogan says he wants to keep the interest rates low.
Right. I did mention that, but I did see that, but they are still charging interest rates in Turkey, aren't they?
Yeah, but that's because,
14%.
But, in his view, is the lower is better because of Islam and stuff.
Right. No, I get that, but isn't it meant to be a secular state, Turkey? Do you think he's trying to move it towards Islamic state?
They're all Erdogan is fully Muslim Brotherhood.
Right. Well, actually, do you want to? Because I'm not too familiar with all that. Do you want to elaborate a little bit on that?
Oh, I mean, there's all sorts of different sects. He's a Shiite, mostly Muslim Brotherhood, like mostly out of Egypt. They're kind of like hardliners. A lot of the, I don't know, I guess U.S. calls them freedom fighters, but we call them terrorists. So could come out of those areas,
Right. So if I understand correctly, he's trying to justify the volatility and the reason of his rationale as so we don't pay interest at the end of the day. So it could be an election sort of move. I got you. Yeah, I mean, he's a difficult one to work out, that's for sure. And it just shows, and there's a lot of, it's like where there's just a bankruptcy of good leaders anywhere in the world. I'm sure there's some if we really put our heads together. But, we talked about Johnson. He doesn't seem to be too in control. He's got one hell of a hairdo, though. Pity he's not a rock star. He's in the wrong business. And then we got Biden. We don't know much about the new German guy. Macron, a lot of people have different views about him. So we got a lot of these powerful people that they don't inspire confidence, do they?
A lot of these people in power, I don't know if they're powerful.
That's a great comment. Thank you, Nick, for joining us. Nick's actually on the other side of the world, so and you're in a couple of weeks of lockdown, haven't you?
Indeed. Have a good evening, and speak later.
Thanks for sharing that on the options. That's a good line. They're in power, but do they actually have power? That's a good point. I'm just reading this from Morgan Stanley. I think we mentioned it earlier, but they've called a peak in Omicron in 10 to 12 weeks. Or even sooner. So all this fear and fire, even with someone who's been conservative in their estimation, doesn't have it too much out. So it's going to be and that's assuming not mass lockdowns and all that sort of stuff, which we've proven doesn't work anyway, right? Otherwise we would be in this situation,
It can't work because if you take people and you lock them into high occupancy buildings with the same air supply, and this is a virus that spreads airborne, then you haven't updated the HVAC handling so that it uses UV and HEPA and all that to properly, destroy the virus, then you're just locking people in spaces to get them sick. I hate to say it, but that's ultimately 100%. What happens in a lot of those situations. On the other side of it, with Omicron, it's now 74% dominant in the United States. So if this strain is actually a more mild, more contagious variant, then the silver lining here is this might be the end game for COVID. Because if this becomes the dominant strain and subsequent strains become even more mild, then really we're getting to a point where the knock-on impacts on society and the economy and otherwise are diminishing with each subsequent wave. And we're finally getting to a point where we can start to look at this as an endemic or an epidemic situation rather than a pandemic.
Yeah, well, I something tells me this thing's never going to end. This is with us for the rest of our lives.
Yeah, but I'm saying like let's say in 2023, or late 2022, instead of, oh God, we're all going to die. It's, I got a case of the COVID. I'm going to be homesick for 2 days, but it's just a cold or it's just a flu.
Like a cold or a flu.
Yeah, exactly. I think that's the trajectory that this may take if the initial signs on Omicron are actually accurate. I mean, South Africa has been pretty transparent about this. They were the first to identify it. I don't know that it was necessarily first there, but they were the first to identify it. And they've said, and their population has some demographic differences in terms of age, but they've said it's been mild for the vaccinated and for most of the unvaccinated. And so let's see how this plays out. In the next couple of weeks, we're going to have a really good idea, especially with how quickly it's spread across the U.S. and become dominant, as to how much of a problem it really is. And if it ends up that it really is kind of just like a flu thing, you're right, Madavi. It could be with us forever, but it might be a much different conversation.
Yeah, well, I just see the money they spent and all the stuff they're doing. I think they're going to milk this thing for a little while.
I think they might try. I think they might try. I think look at the CEO of Moderna. Wasn't this just the best? Wasn't it the Thanksgiving night or something like that? He comes out and he says, the vaccines that we put out there, they're not going to work. We're going to have to make a whole new vaccine. We're not confident about any other vaccines. And then today, the same company comes out and says, if you get the third shot, you're protected. Now, did they know that back then when FT did the interview? I don't know. But how can you make such a pivot? It's a little bit, you start to lose credibility when your CEO has no medical, no epidemiological, experience, is saying with authority that we think our vaccines aren't going to work. And then, 2 weeks later, they're saying, oh no, everything's gonna be fine. Or 3 weeks later, it smacks of trying to manufacture a narrative.
Oh man, it's all junk. Look at Kramer today. He's saying, "Oh, I got COVID, but I got the shot. I'm okay. I can go on marathons."
Well, yeah, it reminds me, if you look in the history, if you read up on like the Hong Kong flu or the other SARS, it's all gone the same way. This one was obviously a lot. In fact, the first two versions were much more powerful, as you said, and that's where it happened. But at the end of the day, it's for what we're talking about. It's how it affects the markets and the economy and people. And
they're always trying
factor. Well, there's two things. What you say, Madavi, is the farmer and the lobbying will keep it in the front page, right, in the US. So that's going on as far as they want to keep making money. But overall, the economy and the people will, at some point, they just got to move on because they're losing everything right now. I can't tell you how many people I've come across that have lost everything, right?
And what we've noticed here is with each subsequent iteration of COVID, not only have we seen this sort of diminishing impact on the economy, there's also a diminishing impact on markets and a diminishing amount of time in the news cycle spent on it, a diminishing amount of chatter on social media. The world is becoming less concerned and more disinterested in this. It comes up. It causes a ephemeral amount of fear during a ever shortening amount of time. And then we kind of move on. And so, Omicron was no different. And there's a friend of mine who does deep data analysis on this and shows trends about, what's happening on social media with regards to these variants. And he showed pretty clear that with each subsequent variant, people's attention, the amount of mentions, the amount of overall social traffic pertaining to them keeps dropping.
Yeah.
Actually, here's something interesting on that. I just see a headline going across. Omicron is now the most popular COVID-19 variant. Is now the most, which is, I think you might have just been mentioning when the CDC 74%. Said 73% of all cases, but get this, 90% in some regions. It doesn't say where those regions are.
How about the NFL? They're going to stop testing like they did because too many people are coming up with COVID.
I saw that in, a lot of different sports like that.
It's symptomatic.
But it's all this variant, right? It's this variant.
It's funny. So the vaccine was supposed to, if you got sick, it was a breakthrough. So everybody's having breakthroughs now?
Right.
Well, so one thing that we're not really...
And that does take away the thing is that was on the first two, or anyway, pre-Delta. So it did.
There's two things to think about.
Sorry?
There's two things to think about in the context of breakthrough. The first thing is that the durability of vaccine-induced immunity is ephemeral. Somewhere between 3 and 6 months, it begins to drop off, even more meaningfully, I think, in the mRNA vaccines for BioNTech and Moderna. The other thing is that with each subsequent variant, because it's differentiated insofar as its RNA and its spike protein, becomes more and more likely they can break through. So Omicron is kind of the perfect storm of, it's a variant that's differentiated, and it's happening during a timeline where most people are far enough away from their last shot, unless they were boosted, where it can impact their immune system. So that's interesting to see that, because then the other side of it is, oh, wait, but it seems to be pretty mild. So it's interesting because, the White House came out today, and I got a lot of flack for putting this out from some, and I got a lot of kind of hoots and hollers from others. There's so much division about speaking about anything on social media. But nevertheless, I put out a statement, and it was just a piece of what the White House said, just a piece of a longer interaction. But I want to read just these two paragraphs. This is directly from the White House. It says, "We are intent on not letting Omicron disrupt work and school for the vaccinated. You've done the right thing, and we will get through this. For the unvaccinated, you're looking at a winter of severe illness and death for yourselves, your families, and the hospitals you may soon overwhelm." Now, think about that in the context of Omicron. If indeed it is mild, right? Then
You're
what just
reading that
happened?
verbatim, huh? They actually said that?
Verbatim
Wow.
from whitehouse.gov. Yes. Now,
Yeah, that's,
obviously, there's greater context. There's other things that were in that. But those two paragraphs stand out as some of the most unfortunate and dishonest and hyperbolic communications from, by the way, I might add, an administration that in March, the CDC director was on TV crying that this was going to be doom, that COVID was going to end our country. In May, she said you can take off your masks, you can start doing social gatherings again. In July, we're back to doom and gloom. This administration and their flip-flopping and pivoting and inconsistent communications has been a big problem from day one. Has had the prior administration.
Well, yeah,
but
I was
this
gonna
right
say
here,
Mr. Fauci.
wow.
I mean, Fauci
Yes.
don't wear a mask. Oh, okay, put on a mask. Now put on 4 or 5, whatever it was. I mean,
now put on 10 of them, right?
What's the voice in administrations? We got a wild dog over there in California.
Yeah.
We're going to activate server muting just temporarily, Madavi. Let us know when the pooch has been
this
muzzled.
time of the year, everyone's it's a little bit casual. But my 4 dogs are under control. Nothing to do with the animals out the backyard that I keep sending them out to catch. But yeah, it is amazing that they can come up with that kind of hyperbole. And the scary thing is that in a partisan world, half will be offended by it, like, what the heck you saying? The other one will just let it pass, like as if that's okay. I mean, at the end of the day, common sense is the biggest thing in all these things, and that's just gone out the window.
It really has.
And so, I mean, in everything, even investing, there was no common sense when everything was going through the roof. And then you had things like Hood. Remember Robin Hood when they shut all the things down, and somehow they got through. I'm amazed personally that there was a more outcry and they even got to IPO status, because what they did was pretty despicable, really, to the smaller investor who they're meant to be feeding. But the banks are just so powerful, they just steamroll everything. And lo and behold, what happened to Hood when they come on? The funders, the initial depositors made all that money, and now the small investors wrecked, right? Whether it's come all the way down to what, 18? I didn't look at it today. It was $17, $18 on Friday. There's so many cases like that out there. But before we go, let's see. We've opened back up on futures. They're up a few tags. We are under the 50 DMA. So we'll see how we go. But it is scary when governments just, I read a thing from Johnson in England before. Like in the one probably in 3 paragraphs, there was a flip-flop each way, just in, if this happens, I don't want to do this, but, and it changes every day. As you said, not a dangerous variant.
Mate, actually, I've got some statistics I want to share real quick that speak to exactly what you're talking about. Let's go to the UK. UK at January 2021 COVID peak, 59,000 cases a day, 1,250 deaths a day, 2.12% case fatality rate. UK today, 77,000 cases a day, 120 deaths a day, 0.15% case fatality rate. And we're seeing similar in Spain, South Africa, France, Germany. So these statistics can be replicated. This is initial data that does strongly suggest that, in fact, Omicron is much more mild. In fact, maybe 10 times more mild.
Well,
now, let's just put that.
But let's just put that in the flu. That's lower than flu, right? Common flu.
It might be, right? It might be. This is really interesting to see, because here's the thing: the White House knew all this data before they came out. They had to. This data has been out for a little while. They keep contact with other peers. They have a whole team.
That's a big lead that they had to. They should have.
Well, I mean, let's put it this way. The information is in the public domain, so there's nothing stopping them from monitoring it. So to come out with that statement, knowing full well that the dominant strain of the United States, everywhere else, and including here, is seen as more mild, and you're talking about you've got to do this, or you're going to be killing yourself and killing your family and flooding the hospitals. It's so over the top. It's so authoritarian in message. And the thing is, I'm not against vaccination. I'm not against reasonable precautions, which, by the way, they don't even talk about what type of mask to wear in this country. Germany's wearing N95s, Korea, Taiwan. They all have good guidance on masks. For some reason, we don't have any proper guidance on masks. And we also aren't doing anything about air handling. We have all these high occupancy buildings that people co-occupy, and nothing's being done to update that. But it's all about this one thing. Let's scare people to death about the only tool that we're going to talk about.
Right?
But if you want to stop this thing, you got to use the other tools. But the funny, ironic, evolutionary, whatever you want to call it, item of this is, well, it looks like it may be set to kind of stop itself insofar as the severity of it. And if that ends up happening after all of this nonsense, I don't think there could be a more poetic ending to it all.
Well, and on that, 2 weeks, I think we were talking about it here, 2 weeks before Omicron became a thing, as far as, that Thanksgiving week, Japan issued their health ministry or whatever issued a statement saying, we believe that this is really good news. We now have the variant of COVID that is now potentially going to destroy the whole thing, eventually eating the whole thing up. I have not seen any publicity about that other than in Japanese and Australian and Taiwanese papers. I've seen nothing in our side of the world. And I noticed today also a Japanese company came out and said that they have a drug that will work for Omicron. I mean, I'll look for it later and put it on Twitter, but this stuff, so it's very convenient what's told and not told to us. And I'm as far away as a conspiracy person as you can get, as you know. In fact, my only conspiracy really is that conspiracy theories are run by powers that be, and that's documented, from spy agencies, all that, how to control the people. It's pretty self-evident.
Psychological operations.
Right. I mean, if you get them thinking about something else and blah, 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 and the more outlandish it is, the more of an excuse, blah, blah, blah. We can go on all day. In fact, markets move on that sort of stuff. Not saying necessarily conspiracy, I just mean manipulation, the herd mentality. So I think stuff like that, when you see such blatant miscues, is interesting. How the trouble is, it's kind of like that Erdogan thing. The damage happens, and it creates a transfer of wealth through positive, accumulation or losses, profits, however you want to name it. So that's the thing, right? And there's no, it's like fat fingers are real, they happen. Oops, sorry. So that's a hard thing, and that's a hard thing in markets, and why I'm a big believer of charts and more order flow, and the herd mentality is one of the biggest things. So most things I use revolve around that. It's just you could go on all day about some of the misinformation out there, but is it intentional? Sometimes it is, but I'm just starting to think the world's leadership is we're giving them too much credit. I don't think half
I
of them
think
have a
that's
clue
that.
what's going on, you know?
Yeah, I think that's a really good point. At the highest echelons of power in many countries around the world, there is gross negligence and incompetence at scales that, I haven't been alive throughout all of human history, but I have to imagine that at least in modern history, some of this stuff is rather unprecedented. And it shows. And it's also interesting because you just have a vacuum of any honest political discourse. Intellectualism is shunned. Talking honestly about what's going on in anyone's country where there's this divide, it just creates this static. Like, we have two sides that are spectators and they're watching a football game and they're just rooting for their teams. They don't want to have an honest conversation about what's
I've
actually
always
happening.
said that, yeah. So two football games.
Yeah, we both have.
Partisan.
Exactly.
Let's say the Cowboys versus the whoever, the Giants or someone.
Yep.
It's and that's not just here. That's right around. Well, here's extreme because people tend to not switch parties, and both parties are run by rich people. It's like nowhere else on the planet. And
Yeah.
as not being born here, I don't understand it. And
Well,
so
you
it
know
took me
what?
a while to understand when it comes to gauging how that affects markets, because that's kind of a lot of what I do, So
Been here. I was born here, and I still don't really understand why people put up with it. Because you even have like Cambridge and Yale, I believe, did a study, and they said, look, when you look at what people vote for, what their will is, and what the actual political outcomes are, they're completely two different spheres of reality. People want one thing. Economic elites want another thing, and those desires are honored, as most legislation is actually written by lobbyist groups at the state and federal level.
100%,
And that those
yeah.
and so, when we look at this, how does this all affect markets? Well, look at the Build Back Better bill. Who wrote that? A bunch of different lobbies, and boy, did they have a little bit of a hissy fit, right? It's really interesting to see that with all these bills, the language is template. It's boilerplate stuff that is literally being manufactured at the behest of large corporations. In fact, most legislators don't legislate. They don't even read the bills that they're passing. So that's an endemic problem with our structure of government, and it has a big effect on markets because, as you were saying, with regards to COVID, but it applies here too. It does promote upward redistribution of power and wealth. It also promotes economic fragility and instability. Because if you have 60% of the society living paycheck to paycheck, and then you have 10% that have more money than they know what to do with, that equilibrium is an imbalance that just creates and exacerbates socioeconomic problems. And so it's really interesting to see that all in the context of what happened with COVID, because, it doesn't really matter what side of the aisle you're on. You can see objectively that the average person was left behind and corporations were given access to a near unlimited amount of money, that billionaires got more wealthy than they've ever been in the history of humanity, and that wealth disparity in the United States is far greater now than it was before the Great Depression, which was the greatest wealth disparity that we had seen in this country in the 20th century.
Right. Well, I think as far as working out the whole partisan thing, I think it's as simple as us versus them. People want to be on a team, and we compared it to the NFL or whatever. But what happened usually if your team's not doing well, unless a lot of people switch sides or think, what, maybe I'll follow a different sport. But it's so, and at all levels here in school, what they teach, what you can't say, you can't think for yourself. Everyone's outraged by everything. So then that all inverses and flips on itself, and that's kind of where we're at. The sad thing is, and this is the point I think you're making, if you're generally oppressed, generally poor, you're used as a pawn at times, as we saw last year in all those riots and stuff, or for someone to make a speech in Parliament or Congress or wherever they are, and then nothing happens with them because both parties in the States are controlled by lobbyists and money. I mean, we had a left wing. Supposedly left wing is for the oppressed, right, around the world, and, bring everything up, blah, 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 unions, whatever. Here we had 2 or 3 billionaires running to be president. Yeah, they understand the people. We had a billionaire already in power, Donald Trump, and it's like, okay. And then we have a worship of billionaires like Bezos and what's his name, Elon, all these people. So people ask me, what religion is America? Sometimes I think, well, money seems to be the thing, right?
It really does.
Rather than the true values. And it's interesting we talk about this at Christmas, where the true values of Christianity or whatever, of helping and thinking and tolerance. All of a sudden, it's money. It's not all of a sudden it's been building to this, but over that overhang. Now, if knowing all that, that's why I think we get these dramatic moves in bull markets here more than anywhere else, even though there's elites popping up all over the world. I mean, I'm just reading through as we were talking, a lot that story we did on Erdogan and Turkey over the last few days. There's been a few articles on it. They've been getting a lot of, comments on the forum or on Twitter. And a lot of them all come down to what we're kind of talking about, but a different way. Corruption, people knew about it, powers that be, that big fall that we were looking at earlier. So that feeling is around the world. Whether it's right or wrong, there's a massive mistrust of markets, of people in power, of value of money. Crypto, of course, is all that. That's why it is what it is. A lot of people flock to it, the fiat currencies. It's very unstable times, but we have heard similar things. This is just dramatic, and I think it'll sort itself out. It's difficult because now, instead of world wars, we have multiple mini wars that seem to be non-stop. So it never actually cleanses the system, as they used to say, or give it a big rinse. So interesting times. Well, we have been talking for quite a while, actually.
We have.
So, great discussion. So I think as far as the market goes, we covered that pretty well. But interesting, and we went to a macro. Pretty well, all what we're talking about is what influences macroeconomics, right? So you could argue microeconomics as far as the whole medical industry, the pharma industry, it obviously changed the whole business to make that much more powerful again, say, versus, other industries. But you think how much money went into pharma, right?
Oh, yeah.
I mean, versus anything else. I mean, the only thing close to it, if I wanted to take a case study, would be how Taiwan backed when no one wanted chips, backed TSM, Taiwan Semi, and over in there, and now we see it. They're the most dominant player. Is perhaps this a move for America and Germany? They're the two main players, right? And England with AstraZeneca. Is that a move to control pharmaceuticals and medicine? Same sort of money.
It's interesting too, because some of that stuff, whatever the intentions may be, good or bad, the net outcome, if intellectual property rights are meaningfully eroded, could be very problematic in a lot of different ways. And I don't think that has been fully considered.
No. I mean, I think a lot of it is just reaction after reaction, kind of like the Fed government. The Federal Reserve. It's just been Band-Aid after Band-Aid. Will this work? Will this work? Really since long-term capital. It wasn't even 2008. It's been a long time. It maybe even
it really has. And I would say even since 1987 in some ways, really.
Right. I mean, it's been a constant thing. And I think here, and now we're governed so much by governments that want to be popular rather than wondering why. You saw the whole thing with the whole ESG movement, and now the world's paying for that with higher oil and natural gas. And there's a theory that, that'll make people change. Well, you got to have it in place for you to able to be changed.
It's funny.
Come from,
It's funny if you think about it in the context of these artificially induced energy crises because of stuff like this. Under the backdrop of inflation that is eroding what's left of the middle class, we're saying that we're going to get on our moral high horse and ignore the pivotal role that hydrocarbons have in delivering us to a renewable future and just start taxing the heck out of them instead of using them as the foundation to get us to a world where we have a more diversified power grid. I mean, it's completely ludicrous. I mean, look,
Well,
if they
what's
ever wanted to
ludicrous
do
is
it,
people go along with it without thinking, Fear,
yeah, but
fear
that goes back to the spectatorship thing, right?
right.
Oh, I root for the blue team. I'm going to do whatever they say. I mean, at the end of the day, there's probably some reason that critical thinking isn't taught in school. There's probably, a little bit of that in the context of why we see people not kind of waking up from their slumber and challenging the status quo more about what's the narrative. It's more about, oh, I'm not on that side, so I don't agree with them for the sake of not agreeing with them, not because I thought about it. And that comes with all the stuff we're seeing out there with what's going on with Omicron, with what's going on in the financial world. I mean, with what's going on talking about taxing unrealized capital gains, another slippery slope that could lead into a lot of really unpleasant situations. Because once you start doing it for billionaires, you're going to start doing it for millionaires. Then you're just going to start doing it for everyone. And then all of a sudden, everyone's got to mark their entire asset portfolio to market every year and pay whatever presumed gains they might have to the IRS. And it just really creates a lot of, problematic oversight situations. Just like, and this is another reason.
It's constantly, you've got to constantly trying to get money from somewhere, right? And then try to be popular to whoever's the loudest. I mean, France actually, I can't remember the rate, but they do tax your assets every year.
Remember, Build Back Better was supposed to give much more power to the tax authorities in the United States, not just raising corporate taxes, but giving surveillance powers on all sorts of different financial transactions to the IRS.
I do remember what was it, $600 or whatever? So that's a good way to get everyone to just use cash more. And there's a massive black economy in the US, i.e. cash.
Oh, yeah, biggest in the world.
And crypto, yes, a lot of it's money laundering, but some of it's also just people that are tired of being watched over and taxed or whatever when others don't work. Watching the markets here, just before we're finishing up, I see Apple is now trading over 171 as we open, and the S&P is now trading over 45.80. So pretty big moves as we head into Asia. And that's probably a relief rally more than anything. But I think Apple is also went up with Micron. So that lifted that whole tech sector, which has then flowed on. Unfortunately, the way Vol was, the way it closed, there wasn't really good opportunity as far as, basically buying calls.
Right.
Because here's the thing, if it goes up, if it opens up here tomorrow, if you're too far away or even at the money, you are not going to get the bang for the buck you expect because Vol, Vol was decent. Actually, I see it's selling off now too. The VXX is 22.18 right now, so it's come right off.
Yeah, it really has.
VXY is 16.32, so they've come off pretty good. So good moves for the bull as long as it holds it. We got some work to do. We got to get back over that 50. We are actually, we're still away from it.
Yeah.
So we'll see. Remember, everyone, it is Easter. Stay off the eggnog.
Easter? May.
I just say Easter.
Did you have a little of the eggnog, mate?
It is Christmas. Wow, I just gave myself up. Oh my goodness. I got excited with Apple. That low today was 167.40, so we're $4 nearly. In a perfect world, that would have filled the gap, but it got pretty close. $2 away. So we'll see how we play out. It's going to be interesting. I want to think back in 2018, or was it 19? So it was 18, I'm guessing, before COVID. We had a really bearish December, remember? Just everything collapsed.
2018.
So, and then we had a dramatic rise from there, and that was the start of it, the first big rally before the COVID-inspired collapse, and then, of course, the next big rally after that. So I'm keeping an eye on that because we're still pump primed. I mean, yes, we are tapering, but we're still at pretty good levels of money coming in. And all those, everyone forgets, the Fed took all those losses off those banks from 2008 and 9. I mean, nice to know,
another thing,
taxpayers, where your money's going.
Right, and another thing that the Fed is doing, and they're continuing to do, that doesn't get enough discussion, is when they have bonds that mature on their balance sheet, they are reinvesting into more bonds. They are not just letting that roll off their balance sheet.
Well, they can't,
and so they're,
because they take the loss.
Yeah, and also, I mean, just with treasuries, also, it seems like there's just an effort to keep markets liquid that hasn't subdued in the way that perhaps people are reading the narrative here about tapering. I mean, when I'm out there on social media, I keep reading about people who are conflating tapering with quantitative tightening. They are not at all the same thing, especially when the government is reducing its debt issuance because these kinds of bills are not passing. So even the lack of passage of Build Back Better actually means that the taper is less of a taper because there's less debt issuance. So there's just all these little nuances that are going on behind the scenes.
There's always unintended consequences, etc. And that's why it's hard for me. I mean, everyone wants, what do you think the market's going to do? What do you think that stock's going to do? Well, if I knew, right, I probably, in other words, we don't. And there's so many variants. Well, I hate to use that word, but it is the right word, that can happen. So many bifurcations, so many instances around the world, and so many will fizzle out. There'll be new ones. And we've had such an expansive growth in new technology and new medicine, etc. Who's to know what tomorrow brings, really? So as traders, exactly, it's what the herd is on and what they're off, and that's what runs it, right? A lot of people forget it's that simple, and you can make it hard for yourself, but most people tend to. And some vehicles just, it's not worth the risk, really. Which brings me back to Bitcoin. No, just joking. Nvidia is running hard here now too. So this is all to do with Micron. There could be, there could be already, no doubt, some notes come out to upgrade it. Expect a ton of upgrades there. Micron has disappointed most earnings of late, so there could have been some good shorts on that. And shorts doesn't necessarily, by the way, mean you actually short the stock. You may just not own it, and perhaps you want to buy it. Add it back in or whatever. So that's in reality is a short too. There's obviously the naked short, but and that's why I think Apple ran part of that run up to 180 was people like, oh damn, I knew, because they fall in love with it because the sheep, it's a sheeple or whatever they call it. I should have bought that. That's great, and then boom, it comes down, etc., etc. There's so many like that.
Right.
Well, on that note, my friend, great discussion.
Absolutely.
I will catch you in the AM. Good time to be flat if you're a trader, if you want to get some sleep and trade it in the morning, or if, depends. There's been some good opportunities there. But I think we covered at Omicron very well how it's likely to affect everything. And then once they stop ramping it up in mainstream media. So the other thing that does in a partisan world, somehow, this is what I think, somehow a virus or a disease has become partisan. How does that happen? A virus doesn't pick and choose who it's going to enter, what your political or sports team or religion or anything like that. It's as non-racist as you can get, non-bigoted, right? Oh, I like that guy, and that guy.
I like them all. I want to take root in all these bodies and spread as much as I can. Let's have a party.
Right, exactly. Okay, bud, I will catch you, and thanks for Darby and Nick earlier. And we had a little visit from G earlier. I will see everyone in the